Tax time is upon us. Right now, you're either going to get a tax return or probably have to pay a little bit extra. In this short podcast, I'm going to explain how you can arm yourself when you go in to have a chat with your accountant and get the most from your time with this expert in your corner. Firstly, this episode is sponsored by BetaShares. BetaShares is one of our longest running partners here at Rask. I'm proud to partner with BetaShares because they offer some of the country's best ETFs across so many asset classes and things that you want to invest in. Maybe it's US shares and global markets, or maybe you want to get reliable income. Whatever the case may be, BetaShares has a solution for you. In this episode of the podcast, I really want to tackle accounting and how you can get the most out of meeting with your accountant every year. I'm a huge advocate for actually using an accountant and not DIYing your tax return. Sure, if your tax is really simple, or if you're on quite a low income this year, maybe DIYing your taxes through MyGov is a great way to go about it. But as you go on through your life, if you start to invest or do more interesting things with your money, having a creative and good accountant in your back pocket is honestly worth its weight in gold. So, how do you get the most out of this professional, and what questions should you be asking this tax time? As I record this video, we're in the midst of tax season. Here in Australia, the obligation is actually upon you as the individual to come up with and file all of the numbers for your own tax return. Even though your tax agent will help you do that through the ATO portal, it actually is your responsibility to ensure that your taxes are correctly done. They don't want you to underreport income or overstate your deductions or vice versa. They want you to get your tax return done right the first time. The thing is, tax is really complicated in Australia. We have one of the most complicated tax systems of any country in the world. So knowing what you can and can't claim is actually really important, as is knowing how to prepare your future self for decisions that you might be making today is so important. Unfortunately, when it comes to most accountants that I come across anyway, the majority of them are backwards looking. They want to know exactly what you did last tax year or last financial year so they can help you get a tax return this year. The problem with that is most of us file our taxes months after the tax year has ended and we're already into the new year and we're looking to the future to increase our wealth. So wouldn't it make sense that we at least ask some questions that are to do with our future selves and where we want to go, not where we have already been? This list of 5 things I'm about to share with you will help you get the most out of the current financial year, but also long into the future. These are questions you can take to any accountant, and ideally, the responses from your accountant will determine whether that is a good partner that you want to have in your corner, or if you should shop around for a new accountant. The first thing that I want you to ask your accountant is this: given my situation, are there any things that I am missing, whether they are deductions or strategies that I can pursue? I'll give you an example. Many people who are in a relationship, in couples, there's typically one person that earns more than the other. An accountant can give you immediate advice on whether you should be investing in the person with the lower income's name or in your own name. They can also help you identify deductions or even tax structures that may be more important for you and your family in the long term. Most people in Australia come to realize that once you start doing things like investing or running a business, you will never get a tax return again, period. If you're on a PAYG and that's your only source of income, you might be familiar with the idea of a tax return or a tax refund. That is very uncommon for anyone that actually invests money or runs a business. You end up paying tax. That means that it's really important that you ask the right questions, not just for now, but for the future, so you can prepare yourself and hopefully minimize your tax debts because, hey, who wants to be paying more? With your accountant, this is a prompt to them to try and say, hey, what else could I be doing? This brings me to the second thing I want you to ask your accountant. I want you to say to them, what are your most successful clients doing with their taxes? And should I be doing some of that? Most people think that when you do tax return or when you think about taxes, all that matters is the here and now. But if you think about it, chances are, as long as you're in a job, you're going to be earning way more in the future than you are today. Even if you just stay in the same job, you're probably going to get pay rises, or maybe you'll increase responsibilities, take on management duties, or something like that. So wouldn't it make sense that you want to start planning for that today? Most accountants are so busy figuring out what happened to your tax return last year or taxes last year, they don't have time to really think about, well, hold on a second, where could this person go? What are they capable of earning? How can we plan with them? Now, you're probably thinking, isn't that the role of a financial advisor? And I'd say, yes, it is. And a financial advisor is designed to look forward, and accountants are, by their nature, typically designed to look backwards to calculate your tax returns. But an accountant has the ultimate say on how taxes impact your life. So if that's the case, they can immediately give you some free tips or strategies on how you can manage your tax affairs based on where you want to go in the future. Even though it's not technically financial advice, it is good tax advice. Number 3, and this is probably a really important one for literally anyone to talk to their accountant about. I want you to think about what you're going to do with money over the next 2 years. I want to give you a couple of examples. Number 1, you're going to buy a house. Number 2, you're going to have kids and start a family. Or number 3, you're going to invest more money. If you think about all 3 of those things, they all have something to do with your tax and your income. So wouldn't it make sense to mention that to your accountant when you're catching up with them? And you could say to them, hey, the 3 big things on my list for the next 2 years are bang, bang, bang. I'm going to invest, I'm going to buy a house, I'm going to retire, so on and so forth. Tell your accountant what you're planning to do, and then ask them, is there anything I should be doing now to set myself up for success? Let's give you some examples. Let's say that you're going to buy a house, and this is your first house. You're a first home buyer here in Australia. Houses are extremely expensive, and the only thing that matters when you buy a house is how big of a mortgage you can get. The banks determine your mortgage based on your income, but they determine the actual borrowing power on your income minus the other things that kind of detract away. Things like your HECS, which is stored at the ATO. That's a tax debt. Number 2, any extra tax debts you might have outstanding. And number 3, any other income like bonuses or side hustles that you might have. Speaking to your accountant about how you can maximize your income after tax is a really good way to maximize your borrowing power. And importantly, if you're a sole trader or a business owner, no bank is going to look at you unless you've got 2 years of good financials under your belt. That means you need your accountant to help you make more profits between here and 2 years' time. This is probably the most significant thing that you can do with your accountant is prepare for buying a house or buying another house. I've spoken to so many business owners who have really big incomes but will never get a mortgage because their financials don't look good, because they haven't spent time with their accountant to clean things up. The second thing is a lot of people get bonuses from their workplace. Your accountant might be able to help you and say, hey, you're getting these big bonuses, but the bank probably won't give you the full amount of loan against that because they don't like to see this much in bonuses. Is there another way that you could structure this in your career or in your job to help you get a full-time wage that helps you maximize borrowing power? I really want to hammer home this point is because this is a crucial step in your financial picture, no matter what stage of life you're in, the way you deal with your property. So wouldn't it make sense to put in those extra 10%ers, extra 1%ers now, and then be able to move into that next bracket and get the property of your dreams or the property that you want the first time around? That springboard is so vitally important for whatever happens next in your life. Things like having kids is a really big step. Things like investing for kids is also incredibly nuanced. And we always advocate for people to speak to their accountant so they set that up correctly. I'll give you one more example. Let's say you're an engineer and you're earning a good salary, but it's not great. It's going to get better, but right now it's not that great. What we typically find is that one parent in this relationship might not have the income that they had maybe just a few years ago because they're taking care of the young kids. Meanwhile, they're earning a pretty good salary from this one person over on the other side, the engineer. But they want to invest for their kids because they think it's a great thing to do for them and a good learning tool for later in life. How do they do that? Your accountant can help you structure that and make the decision between, should I own the investments in my name as the engineer? Should I own the investments in my partner's name who has a lower tax bill? Or should I own the investments in a family trust or some other type of structure on behalf of my kids? Now you can see that this is a really strategic moment for you because whatever you do now, if the kids are young, in 15 years' time when there's going to be a tax bill to pay having it set up correctly the first time is really important. Now, you're probably thinking most accountants would charge me extra for that, and they would, but this is the secret sauce of accounting. It's not doing your tax return. Most of that stuff's automated these days. You can get strategic tax advice now for future benefit. So those are some of the big rocks that I would get them to try and turn over with you is, what are my goals in the next 2 years? How can I plan for them today? I've got 2 more for you. Number 4 on my list is, can you help me calculate my net worth? You're probably thinking, are you staring in the mirror too long? Is this a vanity metric? Calculating your net worth is actually a really amazing thing to do, because it's not until you put things down on paper you realize the difference between assets and liabilities, between the value of your house and your mortgage, between the value of your shares and your credit card, all of these different things. And if you can track that over time, it will give you so much motivation to continue to pursue wealth creation for you and your family. Knowing the difference between assets and liabilities is something that your accountant can help you with. They can help you understand, hey, the value of your property has done this, the value of your superannuation has gone up, and I can see that you've earned this much and saved this much this year. After all, they're doing your financials. Wouldn't it make sense to ask them those types of questions? If you've got a good accountant, they'll be proactive and help you understand this. They might not be able to calculate it immediately, or they might just give you a spreadsheet or help prompt you to go and do this activity. It is a fantastic thing to do to get a really clean financial picture. Remember, if you were looking at companies, like in the stock market or something like that, the first thing you'd probably look at is the balance sheet, which shows all of the liabilities and all of the assets of the company. It's kind of like your net worth. A company reports that every 3 or 6 months. When was the last time you did it? If you don't know what to do, get your accountant to give you a hand. Number 5, this is the big one for all investors. Once you realize that you'll never ever again get a tax refund and you'll start paying for tax every year, the most important thing you can do is keep accurate records. But as it turns out, it's not always easy to do. I would like you to ask your accountant, okay, so we're doing my tax return this year. Over the next 12 months, I plan to invest more in shares, ETFs, crypto, super, all of these different types of things, property. How can I make my administration easier? How can I make your life easier? Because I'm not going to stop investing just because you don't invest, dear accountant. I'm going to keep investing. So how can I make this easier? We've done a lot of episodes on the podcast recently, including with Navar Trosselou from Navexa and the ATO itself, to help you understand how to manage your taxes in an automated way, but also if you're a particular type of investor, all of the requirements and tax strategies that are available to you. Most accountants don't always know the exact rules when it comes to investing, because not everyone in the country invests. So the onus is upon you to either find a good accountant who understands it, or to put in place good administration, automation, tips and tricks to help make your life easier. I'd really encourage you to check out those resources, and after listening to them, make sure that you speak to your accountant proactively about some of the tools that you might be able to use to help you get ahead and stay on track and not be overwhelmed at next tax time. So there you have it. Here are the 5 things that you should ask your accountant this tax year. Number 1, given my situation, are there any strategies or deductions that I'm missing? Number 2, what do your best clients do? Should I be doing some of that? Number 3, over the next 2 years, my big 3 financial priorities are ... What should I be doing to get the most out of those 3 priorities now? Number 4 is, can you help me calculate my net worth? It's not about your vanity. It's about getting a balance sheet done, and your accountant is a fantastic resource for that. Number 5, if I'm going to invest over the next 12 months, how can I make my administration and my life easier? And in doing so, dear accountant, make your life easier as well. These are just 5 questions you can take to your accountant. I would love to know what questions you would ask and what I've missed. Getting good accounting advice in Australia is actually really hard. So it is upon you and us to prompt our accountants and extract some of the gold that they've got buried inside that noggin of theirs. Leave your comments for me in YouTube, in the comments below, on Spotify, using the Q&A functionality, or jump into the Rask community. I'd really love if we can share some more tips this tax time and make everyone's life a little bit easier. Thanks for listening to this episode of the Australian Finance Podcast. Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel, or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.